Okay, we'll call the meeting to order. This meeting takes place in the traditional and ancestral territory of the Mi'kmaq people. We are all treaty people. So first thing is approval of the agenda. Recommendation that the audit committee approve the agenda for August 25th, 2026, meeting as presented. Moved by Councillor Strong, second by Councillor Fullerton. All those in favor, raise your right hand. Motion carried. Approval of the minutes from the September 29th, 2025 audit committee meeting minutes. That the audit committee approve the minutes from the September 29th, 2025 meeting as presented. Moved by Councillor Babineau, seconded by Councillor Daphne. All those in favor, raise your right hand. Motion carried. Business arising from the minutes, there isn't any. So now we're going to new business, 6.1, Town Auditor's Overview Presentation. So I guess it's you, Mike.
Well, thank you for having me. I think I know most of you, but I'm Michael Beliveau, partner at Bellevino. I'd be considered the partner on the audit. So for this year, the audit fees anticipated to be $24,750, up a little bit from $24,000 last year. We are expecting to start our field work next week. So our team will be led by Luke Richardson and Zach Gladwin, who have worked on it before, and they'll probably have a CPA student or two coming in to help do some of the testing on that side. So I know we've had several of these meetings, so I've tried to find something new to talk about. So I went through the Nova Scotia FRAM for the municipalities. So there's just looking through that, there's additional audit procedures or audit requirements that we have as far as auditors that are kind of outside of what would be if we were doing a normal audit of a private company or even not-for-profits for that matter. Come on in. So one of them is municipality receive approval of the Minister of Municipal Affairs for borrowings. So that's kind of within our audit work. We look to make sure all those approvals in place. And I think the debentures are basically in the spring and in the fall, if I'm correct. So that's part of our normal procedures to make sure those approvals are in place. The verification of all capital expenditures were incurred for the purpose for which the debenture issuer term debt was authorized. So within the fund accounting and PSAB, the way it works is when you have a capital expenditure, you have to fund it in some way. So you can fund it through debt, you can fund it through reserves, or you can fund it through operations or grants or whatever else that may be. So part of our procedures, which is a little different than other places, is when there's a capital addition of some nature, you put a sidewalk in, a sewer, we also vouch to say, okay, how was that funded? And then we vouch the funding to make sure, okay, yep, that was approved. So it's just a little extra that you would see if you were just a normal not-for-profit, you bought X and that's kind of all we'd be concerned about. So that's just an extra step there. Then the authority to raise funds for the purpose of paying these amounts reported in respective capital fund balance sheets as due to general operating funds. Part of the requirement is, so when your year end's completed, there ends up being kind of due froms amongst the various operating fund, capital funds, reserves, and that makes sense because numbers are moving as they're finished, and you can't move the cash at March 31st because sometimes you haven't completed the work. So each year we actually vouch that those balances that were shown at March. So in this year, the balances that were shown on March 31st of 2025, we go and actually vouch to see that the money was moved at some point during the year before March 31st, 2026. And that just proves that when your reserves or your capital or whatever it is, that they're actually funded. So if you don't move the money, you're not actually funding that reserve. So sure, the cash may be sitting there. So it's just what the province wants to see. And so it's an additional audit procedure that we do is to make sure that if the operating fund owed the capital fund X at March 31st, 2025, there was a transfer for X at some point within the year. Bring it back down to zero. It's not going to be zero at March 2026 because other stuff has happened throughout the year, but that's just an additional audit procedure that we do. The filing of claims and returns immediately upon receipt, be it for tax rebates, grants, or anything like that. So we make sure that those types of filings are done on time, in conjunction with if it's a grant for capital assets or if it's gas tax or filings with the province that are required. Part of our job is to make sure that those are filed on time and appropriately. The approval of verification for all expenditures incurred, capital and operating, were spent on items for which the municipality or village had authority. That's pretty straightforward. You know, are you spending something that you're not allowed? It rarely comes up, but it is part of our procedure to make sure that all the expenditures, and those are happening with your internal controls to make sure anything that's approved is allowable within the MGA. Approval of commission for commitments, expenditures incurred by the administration on behalf of the municipality. So, you know, same sort of deal. You're spending stuff on what you're allowed to. And the tax sales surplus account is appropriately funded as per the MGA, except as provided no part of the balance may be withdrawn for tax. So the tax sales surplus, you don't have one here, but in theory, if land goes to tax sale and there's a surplus when that is sold, that money has to go into an account, a reserve account for 20 years. The person who initially owned the land has the right to come back for that fund. So that's why it has to be set aside for 20 years. They have that time frame. After 20 years, then it can move into reserves. But it has to be in a specific account because it's not the town's money. You're holding it in trust basically for the tax sale surplus. And then the next piece is the amount of tax sale surplus that will be transferred. The capital reserve fund next year is to be disclosed in the notes to financial statements. So if you looked at other municipal units that have tax sale surplus, there's a note that says, you know, we have tax sale surplus of X dollars, and that's going to be rolled in 2042, X dollars of 2043, et cetera. So if you're looking at different municipal, you don't have it in your notes here because it's not a play, but it is possible. I think you've been close to going to tax sale in my history here, but have never actually, you've been fortunate. You've never actually had to go to it, but it is a common for municipal units. So that stuff I just listed there, it's in, you know, if you're ever looking for some nighttime reading, if you Google Nova Scotia FRAM, the finance manual from the province provided, it's about, I think it's like 88 pages. But it does lay out within there kind of in the table of contents of like the audit committee responsibilities, the auditor's responsibilities, how to account for specific things. So if you are looking to, you know, double check some things to come up or look as for part of the audit committee, what are your actual requirements as an individual or as a committee? It's all there and available for you. So, and if you have questions as I'm going, just jump in, and I'd rather let this go where you want it to go. So I'm happy to answer questions at any time. As far as the auditor responsibilities, so we assess risk and material misstatements on the financial statements. We develop procedures and perform tests to help form an opinion on the content of the financial statements. And we assess the internal controls, processes, and communicate findings with management. So at the end of the day, what you're going to get from us is you're going to get the financial statements themselves are yours. What we're providing is the opinion on them. So the page with the audit opinion that's really what Bella Bovino is providing. It's our opinion. The actual financial statements themselves are yours. They're not ours. The opinion we're putting on them is there. And then you'll also end up getting an internal control letter and a management letter. So the internal control letter would be if we identify anything throughout our audit that would be of concern, we put it in the letter. So last year, we identified a couple checks that only had one signature. In investigation, I think it might be a copying thing from the bank as far as when you look at the bank statements and the copy. But we weren't able to actually tell. But so it was in the letter. So this year for audit, we'll just make sure we double check that to see that everything's there. And then basically it would be removed from the internal control letter. And then the other letter we provide is the management letter. The management letter can address other issues that may not be of concern as far as internal controls. Oftentimes, if there's a new accounting standard coming down the loop, we would mention that in that letter. Or if there's something that's a high button issue, or just something maybe operationally that isn't a risk per se, but it's just to bring something to your attention, that would be put in the management letter so that it's communicated in a formal matter. And we're happy to talk about those as well. And the internal control letter, management is able to respond. So if we do the letter, it's provided to management. Management can put their response right under it. We don't alter it. It goes out. And so the internal control letter goes that way. It goes to you. And then those are also submitted to the province, the letters. And there was nothing really of interest last year in the management letter as far as 2025 goes. So the next piece, just to touch on, so We're auditing the financial statements on a consolidated basis. So what we're actually auditing is everything. In practice, on a day-to-day basis, when you're setting your budgets and all those pieces, you're really doing them on a fund basis. You're doing your operating fund, your water, your electric, and your cemetery, and the various reserves and capital. So that's kind of how you're operating and looking at it. But what we're actually providing the opinion on is all of that brought together on a consolidated basis. So in your statements, you'll have a section A, which would be your consolidated statements. That's what our opinion is based on. Section B is where, more so for your purposes, is we have broken down by fund, but they're different financial statements, income statements, etc. That part technically is not audited. The opinion is being provided on the consolidated. So with that in mind, one of the pieces that we do that helps with our audit, and it's more so from an efficiency perspective, is materiality. So we use materiality as a piece to, okay, when we're saying these statements are good, they're unlikely to be materially misstated. So that number, like there's a number that's materiality. So we calculate that on a consolidated basis. And really how that number comes to be is, what number would it matter? Would it change somebody's decision? So if the statements were off by X, would that impact the decision that was made? So if you think on a consolidated basis for the town of Lunenburg or larger organizations, that number can actually be quite large. We have other kind of performance and higher risk areas that we would go down to, but that's what level we're trying to audit it to. So when you're looking at the financial statements, thinking in that terms, sometimes it's difficult to think because we all like to think personally, and if those numbers are large, you're like, well, that's a big number. But when we're looking at the consolidated, and it just doesn't make sense from a practical perspective, from a cost perspective, that's why materiality is used. It gets adjusted up or down depending on risk and all those other things, but we have to use that. And if it was such a low number, we would have to do so much work that it would be prohibitively expensive to have them done. So that's when you're kind of getting into when you're talking about forensic audits and all those, that's why those are super expensive, because they have to look at everything right down to the dollar, as opposed to saying, okay, what's going on here? And it gets adjusted as we go. Yep.
And Michael, is it fair to say too that after you assess the internal controls, that also impacts what you might select for materiality, because those controls are designed to pick off things that the management would find rather than the auditor would find?
Materiality is a moving target, right? So preliminary, you set your materiality based on the users, thinking from scenarios of, what would a bias be? So if you have covenants related to debt, I know that's kind of a private organization, but those are the type of things that impact that preliminary number. And then that can change as you go through an audit, or it can change. You can kind of do specific materialities to places that you're like, okay, this is kind of a high risk area that we could see how there would be a bias to want this number to be either larger or smaller. It can go both ways. So we adjust materiality when we're looking at those, because that's, so it's in line with the audit. And we'd say, well, yeah, we know we're here, but it's everything we have to look at adds up to that number. So we would say this area, we want a much lower materiality because of whatever the reason may be. So we'll do more work and more detailed, dive down into the lower numbers, where something that's, straightforward, there's no bias or use, like, those straightforward things, we're going to look at less and look more there. So we do adjust it. And it's not just materialities 400,000. So we don't look at anything under that. It builds, but it's just kind of thinking from a global perspective of when you're looking at those statements to get in that mindset, which sometimes is difficult because we get in the weeds. And if you look at the just operating fund or just cemetery fund, the cemetery fund is very small relative to everything else. Is it risky? Is it not? What are the users relying on? Electric utility, you have different users there. If you're dealing with UARB, water, so there's moving targets, but that's kind of the approach that we take, and we use internal controls and where those can be relied on. So one other piece for this year is, so next year, for the year ending March 31st, 2027, There will be a new presentation standard, so your statements will look slightly different next year. There is an option to early adopt. Management has chosen not to early adopt, which is consistent with most of the municipalities that we're dealing with. But so that will be something that will be, that'll be in the management letter this year, just to bring it to your attention. Management and staff are already aware of it and know it's coming. But that'll be a change next year when you're looking at statements, that they will look slightly different than the current. So that's all I have. I'm happy to answer any questions, any comments, or any of those pieces.
Thank you, Michael. Does anyone around the table have any questions for Deputy Mayor?
Thanks. What you just mentioned about the statements looking different was mentioned in last year's in the minutes, I guess. Was that in reference to the same ones, or was it moved back perhaps, or?
Yes. So we mentioned it last year because it was the potential to early adopt, more or less. We knew it was already established that it was coming. So yes, that would be the same changes. It's just they'll apply to them. You have no choice but to adopt them for the March 31st, 2027 year end.
So if I may, Your Worship, follow up. So that is the change in presentation is meant to, is it kind of, it's just a presentation change, not a change in the type of work you do. It's just, is it the idea?
Yeah, so it won't impact, well, I shouldn't say. So they're changing, the main goal of the change is that they're trying to make the statements be more understandable for the general public, and they're trying to get them to match a little better with what you would see in the not-for-profit sector and the private sector, where right now, like one being the example that, so your liabilities on the current presentation are just all grouped as one. So your accounts payable, your long-term debt are all grouped in one, well, not one line, but they're all in the liability section. If you look at not-for-profit or private companies, like long-term debt being the example, private companies will have current portion of long-term debt and then the long-term portion, which makes sense because you're trying to say, okay, what are we spending in the next year? So the way the current statements get, people could say, whoa, you have such large liabilities, not understanding, well, really, and there's a note in the statements that shows what's due in the next 5 years. But as a user, you're looking at it and saying, oh, there's this huge amount of liabilities, but really the liability for the next year is a much smaller number. So that's one of the tweaks, but they're just small things. They're meant to make it easier for the users to understand, to get a truer picture is what the main goal of the thing. And just accountants like to feel good every couple of years to make people change stuff.
Thank you. Any other questions from anyone around the table? Okay, does anyone else have anything they want to? Okay, well, if there's nothing else, I guess our next meeting is scheduled for Monday, September 28th at 5 p.m. in the council chambers. So a motion for adjournment is in order. Moved by Councillor Strong, seconded by Councillor Fullerton. Thank you very much. Thanks a lot.